afternoon, and welcome to a special year-end edition of Asian Midday Market Watch. I'm Brian Fernandez, and with me is my co-host, Jeffery Halley, with the regular guest that we have this year, David Kuo, founder of the Smart Investor out of Singapore. David, before everything else, first of all, thank you very much for your support for Biztech, for being our regular guest on the show since really we started. We really appreciate you taking the time and also all your insights every Thursday.
You're very kind, Brian. I couldn't think of anything better than on a Thursday afternoon to chat with you. And then the listeners may not know this, but once the show has ended, we carry on talking for another half an hour or 45 minutes about everything. Yeah. And we try to put the world, all the wrongs in the world right. And generally, it's an interesting conversation after. Maybe one day we should record the after show as well as the during the show conversation.
That's a good point. That's a good idea. Sorry, Jeff, go ahead.
I said the uncut version.
Yeah, the uncut version is always juicier. Yeah.
Now, for a start, then perhaps you could start by giving us a recap of the key events that you think of 2023 that stood out for you.
Well, what really surprised me in 2023 is that despite the interest rate increases from the Federal Reserve, that was generally followed by other central banks around the world, apart from Japan, stock markets were extremely resilient and they just carried on rising. And anyone at the beginning of the year, when they heard that the Federal Reserve was very likely to increase interest rates and thought that, I better keep away from the stock market and go into something else. Well, I think they missed out because the stock market has the ability to surprise all of us. And I think more to the point is that companies have been able to surprise many of us. A lot of people were saying, in times of high inflation, a lot of companies will suffer. But what we actually found was that many businesses out there had this thing called pricing power. They were able to increase prices in the face of rising inflation. And even though raw material prices were rising, even labor costs was rising, and all the other costs that go into running a business were rising, they were able to increase those prices. And as a result of that, for me, and some of your regular viewers will know, I am an income investor. And nothing pleases me more when I hear about a company being able to raise their dividend payouts. And many of the companies that I invested in surprised me. Companies like Coca-Cola were able to increase prices, increase sales, and increase their dividends during the year. PepsiCo was another one, Starbucks, McDonald's. And the thing that these companies have in common is that they are consumer staples. They produce the things that we need on a regular basis. I'm not suggesting that we have to drink Coke all day long, but it's one of those things where you go in and buy it and you just ask for it by name. And if the price has gone up a little, which in some cases is only maybe 5 or 8%, we don't even notice it. And that, I think, is the secret behind the success of many of these companies, Brian. So that was surprising in 2023. And the other thing was, maybe not so surprising because some had already predicted it, was the collapse of the Chinese property market. I remember many years ago, there was the People's Bank of China governor, a guy called Zhou Xiaochuan, who was the PBOC governor. And he at a conference said, a moment in time will come when lenders will suddenly realize that the money that they are lending to people who want to borrow that money to buy an asset is not going to be safe. And this is what we call the Minsky moment. That moment when I'm quite happy to lend you money as long as an asset price is going up. But a moment in time will come when I as a lender will say, do I really want to lend you that extra dollar anymore? Because I think that extra dollar is going to be at risk. And sure enough, maybe 2 or 3 years after he said that, the Chinese property market has collapsed. And that Chinese dream that many households had hung their hopes on has evaporated. and some of their properties have fallen maybe 20 or 30% in value. And that is having an impact on China and how it hopes to be able to drive its recovery. In the past, the Chinese government just came along and spent its money on infrastructure. Many of those infrastructures were white elephants, as in the case of the property market. So I think those were two big events for me, aside from the things like the conflict in between Russia and Ukraine, the war over there, and also the conflict that's going on between Palestine, the Gaza, the painful episode that's going on in the Middle East, and the impact that could have on the rest of the world. So three things, yeah? So interest rates, Chinese housing crisis, and continual conflict that's going on around the world.
Very, very interesting. I guess what our viewers are all going to want to know, though, David, is how are you feeling about 2024 in that context? We're finishing the year on a high in equity markets, mostly, I believe, because markets are pricing in some quite heavy interest rate cuts by banks such as the Federal Reserve next year. Are we in an exuberant moment? Will this rally continue? Will the world economy keep growing, generating those incomes that you're so fond of? Or is it going to be a bit more balanced into 2024?
Okay. I'm in the process of writing my outlook for 2024 at the moment. And there are two main themes that I have. The first one is geopolitical tensions that are going on. There was something that Henry Kissinger said many, many years ago, and he talked about something called the permanence of impermanence. And what he meant by that is that what we think is permanent is not permanent. And the peace dividend that many people had talked about many years ago that was playing out around the world has been upended to some extent. And what we're seeing now is a lot of geopolitical tensions. I mean, aside from the Ukraine-Russia war, what is going on in the Middle East? I mean, the elephant in the room, of course, is the Sino-US relationship. And how is that going to resolve itself, not just in 2024, but beyond? How is that ever going to be resolved? And my general feeling is that it's never going to be resolved. And I think that the two countries have to agree to disagree. First of all, on political ideology. One country believes in democracy, the other one believes in autocracy. One believes in an open market, the other believes in a command economy. How do you in any way square that circle? And I don't think it's possible to do. So I think geopolitical tensions are going to carry on in 2024. And
David, I want to interrupt you there. I want to.
Sure.
There's also smaller proxy wars around the world that
yeah.
we're not aware of in the general media context, but really is happening behind the scenes, and it involves all these state actors. It involves China, it involves Russia, it involves the Middle East. And I just use one example, the Sudanese conflict. The Sudanese conflict is really the crux of it. It's a proxy war between the major powers. And and of course, it's all around oil as well. So that's really an example where geopolitical risk, I believe, I think like you, and I would love to hear your thoughts as well. I believe that the markets have severely underestimated and underpriced the risks in equity markets. Investors have done so.
I do agree with you wholeheartedly. And I think, I believe it was Jamie Dimon who was saying that for the first time in a very long time, boardrooms around the world are talking about geopolitics, because up until recently, you don't talk about geopolitics. You talk about inflation. You talk about fiscal policies. You talk about, I don't know, changing demographics. You even talk about things like the environment. You talk about those. But now they are talking about geopolitics, and they're saying, what do we do if something were to happen? So I said that the US-China was the elephant in the room. But there's also another elephant in the room, which is China, Taiwan. What is going to happen if something were to happen across the Taiwan Strait? What is the world going to do?
And Jeff, Jeff has a theory on that, particularly depending on the outcome of the Ukraine conflict. Jeff.
Oh yes, well, I believe that if Ukraine was unfortunately to lose its war against Russia, then that would probably embolden autocratic governments around the world to feel that they can get away with certain things as well. And I think that the odds of an invasion of Taiwan by mainland China would increase exponentially if Ukraine was to lose its conflict with Russia.
But Jeff, here's the thing that is going in my report for 2024. It's not even the case of Ukraine losing the war to Russia. Even if there was a compromise between the two, that would be seen as a loss for Ukraine. If Ukraine were to say, okay, let's call a truce, you can keep Crimea, you can keep Donetsk, that already means that they've lost.
And David, that's probably a really a probable scenario, particularly given the fact that not only in the United States, but also in Europe, donor fatigue has set in.
Oh, yeah. Yeah. If Europe or if the next government in America were to put pressure on Ukraine and say, look, this is costing us an awful lot of money at the moment, so why don't we just come to some kind of compromise? A compromise then would therefore be seen as a win for Russia and a loss for Ukraine and the rest of the world. So you're right, Jeff. If Ukraine were to give way, in even the minutest were to give way, it would mean that any country that has might could simply march into another country and say, okay, I'll just take a bit of you. Yeah, I don't need to take the whole of you. I'll just take a bit of you. And that would already be seen as a loss for the defending country. And so that is really, really quite dangerous. And that is why I say that people haven't, and you're right, Brian, people haven't factored in that into what is going to go on in 2024. What if something were to happen? What I can't even contemplate what would happen if China did invade Taiwan, did take Taiwan. What then is going to happen to all the chip makers around the world? Yeah, or the people that require those chips around the world. What are you going to do then?
But also, David and Jeff and I had this conversation again yesterday after the show. It was around the fact that the Taiwanese chip makers are already starting to de-risk themselves by moving some of their production facilities to places like Penang. Now, the interesting thing is, as I did some research, I found out in some companies, 20 to 30% of the engineers in Taiwanese chip makers originally were from Malaysia. So that was a risk factor. So you are de-risking yourself in several ways because A, you're familiar with the environment that you're relocating to, and two, your engineers can literally just uproot and set up shop elsewhere and they'll be perfect, and life goes on. It's a really minimum risk compared to setting up in a new facility somewhere else.
Yeah.
Well, I'm not quite sure it's going to be that simple, but I do understand the strategy. You said there was another theme in your 2024 report that you were writing about as well.
Yeah, and the second main theme, I think, is the belief by the market that the Federal Reserve is going to cut interest rates, if not 3, then as many as 5 times in 2024. Whilst I understand that inflation is coming down, my big question is, why would the Federal Reserve want to cut interest rates at a time when the US economy looks reasonably strong and companies are doing well? Why would it need to do that? Why would it run the risk of pouring petrol onto a fire at a time when the fire is already raging? Now, we all know that corporate America is doing well at the moment, and many of the companies are able to generate higher profits simply from what I once said about the pricing power that many of these companies have. But my question is, why would the Federal Reserve want to do that? And so maybe there's going to be some disappointment in the market when the Federal Reserve doesn't cut as many as 5 times and not even 3 times in 2024. And that, I think, is going to be a danger. And as a result of that, I mean, some of the companies that I do like at the moment are interest rate dependent. So I think that banks are going to do reasonably well in 2024. I think that insurance companies will do well. And again, those companies that have pricing power, I think will do well in 2024. But the thing about inflation is the moment you take your eye off the ball, inflation comes back with a vengeance. And I think the Federal Reserve is smart enough to know that it cannot take the risk of accepting that inflation is going to go away all by itself. Because all it takes is one small spark. It could be anything. And we go back to that geopolitics again. All it takes is one small spark to actually drive inflation back up. I remember when the war between Ukraine and Russia started, I had trouble getting sunflower seeds. Do you know that? I know it's a small thing, but suddenly sunflower seeds just weren't available on the market. And I went to my local supplier and he said, I can't get hold of sunflower seeds at the moment. So my granola taste as well as it did previously. But let's not forget that this small example is played out again in the case of the conflict that's going on in the Middle East. It's disturbing shipping routes going through the Suez Canal. And ships are now having to go the long way round in order to get from Europe to Asia. And they say that that could put up the prices of goods, if not sort of reduce the supply of goods that are going to be available. We all know from basic economics, it's supply and demand. If you don't have the supply and the demand is there, prices go up. So yep. I'm very mindful that inflation is not going to go away by itself in 2024, much as I would like it to.
So maybe we're going to see a lot more two-way volatility across equity markets and other asset classes in 2024.
I think so. And I think what I would like people to remember when they are investing is that you need to know where your starting point is and where you want to end up. And that journey can take 10, 20, sometimes 30 years if you're saving for your retirement. But you need to know where you are now, where you want to be, how long that journey is going to be, and what you need to do during that 30-year period in order to achieve your goal. Without knowing where you are now, where you want to be, you cannot determine what kind of investments you're going to be able to invest in order to achieve those goals. For some people who have a very long runway, you can achieve those goals by not taking as much risks. But if you turn around to me and said, David, I know where I am now, 45. I know where I want to be by the time I'm 50. I want to be a millionaire by the time I'm 50 years old. I'm 45 years now. I got 5 years. Tell me what I need to do. And I will say, my goodness, you're going to have to save like crazy in order to, and you're going to have to take some massive risks in order to get to where you want to be from where you are now, because you're also telling me I've got nothing. Yeah. And that is what people need to remember. Where you are now, where you want to be, how long it is going to take you to get there. And that will determine the kind of investments that you need to make during that journey.
On that note, on a sobering note, David, thank you very much for your insights and thanks for coming on the show, especially for this roundup show.
You're welcome.
Always wise word.
I'm Brian Fernandez, and we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, together with my guest, Jeffery Halley, on Biztech's Asian Midday Market Watch. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.